Now, the next part of our pre-approval puzzle is the I in CIA. And what is that, Angelica?
That's actually your income, right? And we classify this into two different brackets. We've got our W 2
Mm-hmm.
wage earner, right? That's someone that's working for a company, receiving pay stubs, receiving W 2s, having taxes taken out. And then we have our self employed client, right? This is the entrepreneur that works for himself,
Mm-hmm. The
right?
go-getter.
Right. And realistically, we don't know your income unless you file your income with the IRS. The unfortunate part about that is that we have a lot of self-employed clients. I would have to say that write off a lot of their income.
Yes.
Right. So these are all things that you have to consider when you are actually looking to purchase a home, right? Whatever income it is that you're reporting to the IRS is the income that we're using. Most times, with self employed, we need 2 years of tax
Mm-hmm.
returns. Now, in some cases, we've had it to where they only require 1 year, right?
Correct. And that's the case if you are a self-employed borrower or a business owner who has that business or self-employment history established for 5 years or longer. Most of the time, if you've been in business or you've been self-employed for 5 years or longer, we're only going to need your most recent year of tax returns.
Right. But to be on the safe side, we normally ask for two. We're not going to know up front if you need that 1 year or not. So we go with worst case scenario, asking you for two, making sure that you actually qualify with that income.
Right.
Um, and then there are other employment I would say that falls into that self employment, right? Someone who's a contractor receiving a 1099,
Mm-hmm.
right? That's a self employed individual. A travel nurse, if you're receiving that 1099, you're also considered self employed, right? So we're taking the income that's on the tax return. Now, what's the difference between a W 2 and a self employed?
Well, when you're W-2, everybody, it seems like, has their hands in your paycheck. You may have a salary of $100,000 a year, so you're expecting that $8,200 a month to hit your bank account, but Lord bless it, it does not for whatever reason. Uncle Sam's got his hand in your pocket, you're spending money to your 401k, you've got to pay towards your benefits. So you may be expecting $8,200 in your bank account from your direct deposit, and you're only getting five. We're not going off of what gets deposited in your bank account when we're qualifying a mortgage applicant who is a W-2 employee. We're going off of that higher amount, that gross income, before taxes, expenses, and deductions. That's your qualifying income. Like Angelica was saying, when you're 1099, the money that you actually see and that goes in and out of your account every single month is not what we're qualifying you for.
Right.
So you may, as a self-employed borrower, you may say, oh, I make $100,000 a year. What do you mean I don't qualify for that mortgage payment? Well, Billy the borrower, you sent us your tax returns, we saw your deductions, and your income after all those deductions is not enough for qualifying income at this point in time. We're not telling you that you can never buy a home based off of you being self-employed. We're just saying, based off of the information that you provided with that year or 2 years most recent tax returns, that there's not enough qualifying income there for that amount that you're requesting, or for any amount at all. It all depends on your individual situation and your individual scenario. We're not the tax police. We're not going to be saying, why are you deducting this? Why are you deducting that? We're simply looking at what those deductions are. We're allowing what's allowable, such as mileage deductions, to be added back into that. But we are having to follow those guidelines and see and qualify you based off of your income after your deductions when you're self-employed. Another income situation that can be unique is part-time work. We are able to use part-time work even though you're not a full-time employee. However, if you are wanting to use part-time income as qualifying income on your application, we need a 2-year history with no gaps of part-time employment. So if you just picked up another part-time job because you talked to another loan officer, said you didn't have enough qualifying income, you got your 30 days most recent paycheck stubs, we don't have enough yet. We're going to need 2 years of history. I don't need to see 2 years of paycheck stubs from that part-time employment, but we do need that 2-year history. And Angelica, with all the work that she does and the processing and underwriting team do on the back end, they're going to verify that 2-year history for us. So once you tell me we have the 2-year history, we're off to races with using that as qualifying income.